we've seen what happened with these house prices. Look, we're seeing a cooling here. What does that tell us about the overall economy?
Well, to an extent, the cooling down in house prices is it reflects the measures that the government's been taking over the last 12 months in terms of both policy effects and in terms of, morally swaying the people, the developers to cut prices. I guess the game plan is to tighten things up for developers to start releasing inventory in the market at a kind of affordable price for people to buy it. And that's kind of working now, if you look at the broader, the spread of house pricing increase to decline, that's kind of picking up towards the decline sector, Key cities are still going up, but by and large, I think it's on line,
Yeah, people are talking about what happens next as, people are talking about a soft landing for the Chinese economy. Will there be a landing?
Well, the broad hope is that they will be able to engineer a soft landing. If China doesn't kind of soft land today, given the weakness in US, given the weakness in Europe, I think it's a pretty dismal scenario for the rest of the world,
What about sentiment, though, in the equity markets right now? Because we've not seen a lot of move here, have we?
No, sentiment is still fairly bearish, very concerned, actually. And that's got to do something with the banking sector in China. The sector is admittedly very cheap on PE multiples, But you've seen about 12 months to 24 months when the policymakers have gone out and taken a number of steps on macroprudential issues, like raising risk weights, like asking them to increase the loan loss provisions, And that's got to do with the massive loan creation that happened in 2008 and 2009. There are concerns on that. And that, I think, is one of the biggest issues facing China today.
But the thing is, Binay, what are we actually pricing into this market?
We're pricing lower growth. We're pricing stickier inflation than expected. We're pricing more rate hikes in China. And we're pricing continuous attempts by the Chinese policymakers to clean some of the excesses of the past 2 years.
OK, well, so we've had 7 weeks of declines for equity markets in this part of the world. Does that represent a buying opportunity this week, for instance?
I wouldn't go on to the extent of saying whether it's a weekly buying opportunity or not, but valuations seem to be getting better. More importantly for me, people who look at surprise element, the expectations are beginning to dip quite meaningfully. So if you have a period of the next 1 or 2 months when the economic surprises start showing up, as in the sense that the actual data delivery is better than expectations, because expectations are turning down quite sharply now, you could have a much better period for equity markets going forward.
Right. So with that in mind, how would you stock pick, for instance?
Well, we have a very significant bottom-up process. Today, the process is telling us to buy stocks on the energy side. It's telling us to buy stocks on the consumer discretionary side. It's not asking us to buy stocks on the material side or on the industrial side where there are headwinds,
Right, but, so we're looking at underweight on industrials here, consumer staples, which surprises me a little bit.
Yeah, industrials is primarily, you look at the transportation sector, you look at the airlines, they both have significant headwinds. That's why we are underweight on the industrial capital goods sector and the transportation sector, which comprises the bulk of the industry. Machinery is fairly okay. Domestic machinery suppliers are fairly okay. If you look at staples,
I say that because, of course, China's trying to get the domestic economy more based on what consumers are doing rather than anything else.
Yeah, and, that takes us to the next point about consumer staples, where we believe in the consumer theme in China, but probably not through staples where there are expectations of margin pressures. And
inflation, of course, which comes from the margin compression there as well. So, people are saying second half of this year, inflation starts to soften. Do you buy that theory, or do you think that actually it's going to be a bit stickier than what most economists think?
If you look at the lead indications for inflation, i.e. if you look at the World Food Price Index, if you look at oil prices now, in the last 1 month, there are some signs that month on month they're tapering down.
Yeah, but we're talking about real inflation here as well, and not just one which is based on base effects too.
Real inflation is strong. The economy keeps growing at 9 to 10%, given the fact that you don't have the same amount of labor pool that was available to you 5 years back. We think real inflation potential is higher now than it was 5 years back. So you have to live with an environment where you don't get inflation of 2% per annum for the next 5 years. You have to settle for something like 3 to 4% if you keep growing at 8 to 9%. And
which is still phenomenal, isn't it? 8 to 9%.
Yeah, it's great. If you manage it. I personally think if China manages to grow at 8% over the next decade, it's going to be great for the rest of the world.
Binay, thank you so much for joining us.